Peace, peace. How's everybody doing this afternoon? I be the guard, DJ K Wise Allah, aka Kato the Black Superhero. I'd like to welcome you to another afternoon show of the Real 360. And we're gonna get right into it. So listen, grab your pen, grab your paper, grab everything you need. Get a tape recorder because what you're about to hear today is food definitely for your mind and for your financial gain. And without further ado, I'm not going to take the shine away, but we're going to do this right and exact. So I'm going to bring on my brother in God, my co-host, Mr. Josh Amell, or Mr. PhD himself, so he can add on to the bill. Peace to the God.
Peace, peace, peace. I want to say good afternoon to all of our listeners, followers, all the people on Facebook, all on social media, all the individuals who follow us on the podcast, on Live Asian Radio, Spotify, and iHeartRadio. Today is going to be an informative understanding and build that we have with this brother, Absolute Truth for Law, from the Nation of God's Nerve for Laws, 5% Nation. And we're going to build on today is financial literacy. Everybody always talk about bringing forth generational wealth and things of that nature. And this young man, this brother of mine, he's going to show us a blueprint where we can follow to bring forth some financial literacy and financial gains for ourselves, our community, and those who are around us. So at this moment in time, I'd like y'all to bring on Absolute Truth for Law, my brother and your brother. Peace to the God.
Peace.
Please, God. Please, God.
Before we start, I also want to let it be known. God, I want to let it be known. If people that's listening to us right now, if you have any questions during our show, please call at 336-807-9299, or you can follow us along on YouTube. If you got questions, I can pop it up so the guards can see exactly what you're asking about. We'll be able to answer your questions as soon as possible. I just want to make that announcement known. Peace to the God. Peace, God.
Peace. I want to go ahead and echo KY's sentiment, because when you're dealing with financial literacy, it is very pertinent that you start where you are, and we deal with whatever situations that you yourself are in. So if you have questions, go ahead and bring those questions on. There's no stupid question, and I can go on and kind of help you start where you are. Okay, so my name is Absolute Truth for Law. I am a day trader. So basically what I strive to do Monday through Friday, or any day that the market is open, is capitalize on the typical fluctuations on stock prices. Okay, and that is how I, butter my bread. Okay, now day trading is completely different from investing. So investing, you pretty much are looking for something that's undervalued. You're going to park your money there for anywhere between 5 years and up, and allow your money to grow. Day trading is just flipping. I'm just flipping different stocks or indices on a daily basis. Now, you may wonder, how did I come across this? How did I get into this particular field? Well, when we look at that knowledge degree in the 1 to 10, we have and for those who are not 5%ers, there is a question and answer series in our first set of lessons called the student enrollment. The first lesson asks, who is the original man? When we get into the answer says the maker and the owner. Okay, so when you look at that particular answer, it is motivation for all of us to find something to make and own. And I spent many years trying to devise different businesses that I can start. Of course, I'm from the Bronx, New York, the home of hip hop. So my first avenue that I thought, I'd be able to make my impact is hip hop. I released music independently, and I did a series of different ventures. And one night when I was home, I said, what is it that everybody wants? And the answer was money. And when I looked at that, I decided to create an investment club. So in creating that investment club, that's kind of how I got introduced to day trading. When I started the investment club, I was just basically buying or investing in stocks that I know. So there is a famous investor, hedge fund manager. His name is Peter Lynch. And he said, you should invest in what you know. So if any one of us was to even go in our closet or anywhere in our home, we'd be able to see so many powerful companies that we're customers of, that we can invest in and make money off of. First thing that comes to mind for me is Nike.
Right.
We all got Nikes. I bet you all of us got at least 10 pairs of Nikes. Okay, and then when we add our children into the mix, forget about it.
Right.
Okay, you got Nike, you got Apple, you got, we both have YouTube channels. Okay, YouTube's parent company is Google. That's an investment right there. Timberlands, that's VFC. Levi's now is public once again. So basically, that's how I started in that investment club. And I began to watch Bloomberg Channel, CNBC, and just how you have at the bottom of the screen all of your contact information, they have a ticker that goes at the bottom of the screen, and you can see all of the different stock prices. So in me doing the knowledge to that, I would see the fluctuation of the stock prices on a day-to-day basis. And that's what kind of turned me on to day trading. The whole idea of buying, a stock that is at $50, we trade in share blocks of 100. So if that stock moves $1, then I just made $100.
Okay.
Back then, you needed to pay a commission to buy and to sell. With the advent of Robinhood revolutionized the game because they allowed people to invest without no commission. And once they did that, everybody else stopped. I personally do a majority of my trading on E-Trade. And when I was first started rocking with them, it was $9.99 to buy and $9.99 to sell. So we take that $50 stock, you trade 100 shares, that's 5,000. Then you had to put that $9.99 on top of that to buy, and then $9.99 to get out. So you already kind of behind the game when you start because you got to pay that commission. So when Robinhood came with commission-free trading, that knocked everybody out. So most platforms right now will not charge you to buy or sell a stock. Okay. Now, in becoming a day trader, the time that I started day trading was 2011. At that time, there was a European crisis, and I was trading volatility. So volatility measures the movement of, like when a stock is moving like that, it's very volatile. You take something like Microsoft's gonna move like this. Nike pretty much moved like that too. You know what I'm saying? But if the stock is moving like that, that's volatility. Now, if the whole entire market is moving up and down like that for whatever reason, political unrest, any type of uncertainty, the pandemic is a perfect example. The S&P crashed 35%. So I have about 10 years experience, and a lot of times when I would do the knowledge to what happened historically, they would talk about something called a limit down day, or when, and a limit down day means this: if the overall market drops more than a certain percentage, they will halt it. They will stop so that people can calm down, and then they will resume trading. Each halt is like 15 minutes. I had never seen this for the overall market. I've seen it with individual stocks. I had never seen it before. During the time of the pandemic, I've seen it several times, 4 or 5 times in the space of like a month and a half. Okay, so that kind of gives you the context of how serious the pandemic affected the market. Okay, now in 2011, when all this was going on, it was a European crisis, so it was affecting our market. I was trading volatility. I was fresh out the gate. I was making $500, $700 a day just because I was trading the right thing, which was a volatility instrument. I didn't really know what I was doing though. I didn't know what I was doing. My black woman, she had purchased a whole bunch of books for me. I would kind of skim through the books. I wasn't really doing the knowledge. I wasn't taking it from knowledgeable. And I was just kind of skimming through it. It was like most traders lose all their money in 1 year. I was like, hey, ain't talking about me. Ain't talking about the God. I just made X, Y, and Z. Mm-hmm. Okay. Then the tide changed. When the tide changed, I lost about $15,000 in 1 day. So once that happened, it was very debilitating. You know what I mean? It crushed me for about 3 days. And I said to myself, well, you're going to have to get 2 or 3 or 4 jobs, or you're going to have to master this. Okay. Then I went back and started reading all of those books and really studying and understanding how the market works. Okay. So anybody that's out there that's interested in day trading, I am a living example of someone. I didn't finish high school. I dropped out of high school, went back, got my GED. I didn't finish college. I did start college. A lot of my passion for education has come from the nation. We get these degrees, you have to show and prove these degrees. What does that make you do? Go to the library. Right. Sit down, have debates and study. So for 5% to pick up something and read something, that's second nature for us. We have to do that. Right. You know what I mean? So that's what really inspired me to move forward and do what I got to do and study. So I want anybody out there that is interested, that have heard about it, I want you to know that you can do it. It's not as hard as it seems. Okay? It just takes a lot of study. But the most important part, okay, the biggest thing that you have to master is your emotions. Fear and greed. Anybody, and maybe I should have shared some charts. Anybody can look at a stock chart and tell if it's going up or if it's going down. Right. What you have to control is your emotions. Are you greedy or are you fearful? Is your greed or fear justified? That's what is going to determine whether you can make it as a day trader. Now, you also have to be aware. Remember that example we did? You put $5,000 on a line, you enter at the wrong time, and that stock pulled back by $5. Okay, that's $500. Can you stomach seeing your account go up and down like that? Especially if you might be working a job and you have to leave or something like that. Can you be okay knowing that your account is going to fluctuate? Some people don't have the stomach for that. And that's okay. Because when I look back at a lot of the stocks I was trading 10 years ago, had I just purchased them and left my money there, I would have still gained the same appreciation. So that's how we talk about investing now. There's a video on my channel and it's called the Major Index Flex. Okay. And I did that for a sister who asked me about the major indexes, which you have S&P, the NASDAQ, the Dow Jones. Anytime you're on the news or anything like that, you'll hear them mention how those indexes performed. So I made a video to break down what makes up those indexes. All right. Now, in that video, I also included the performance of those indices from 2013 to now, because she has a young daughter who's 8 years old. So I wanted to show her, look, if you would have just put your money here in 8 years, this is what you would have made. So the biggest gainer was the NASDAQ, triple Qs, and that gained 350%. Had you added all of those indexes together and came out with an average, it was about a 200% average return in 8 years. So all of us that have babies, that have grown children, that's, like my young God is wisdom equality now. So just think about had I taken $2,000, $3,000 and parked in someplace like Apple or something like that for 26 years, it would be a ridiculous return.
Now, Pat, I got a question. Could you expand on the 3 indexes?
Okay. Well, actually, there's 4 indexes.
Well, okay.
There's 4. Now, the 3 major ones that you're going to see on any newspaper or any news program is going to be the S&P, the S&P 500. Those are multi-cap companies in America. Okay, the 500 biggest companies in America. Okay. So if you want to see, well, how is the market doing overall? You would look at the S&P as a gauge. Okay, so if we look at the S&P over, like, just looking at the pandemic 2020, it lost 35% of its value from March. It took a huge drop because everything shut down. Right. So people started losing revenue. So that's the S&P. Then you have the NASDAQ. NASDAQ is really where most of your tech stocks are going to live. That's and then most of those stocks have 4 letters. So you'll have Apple, you'll have Google, Microsoft. Most of the tech companies are going to be listed there, but also you'll have biotech, which is like, drug stocks and stuff like that, and their suppliers and all of those type of things. Now that's going to be the beast. I call it the beast because technology is innovative. You know what I'm saying? Like, you look at us, right? How did we used to communicate when we got knowledge of self, when we was running around? A lot of times we was using the phone, still the pay phone on the street. Right. We got to the beepers. Now you have a whole phone, you know what I'm saying, that you can use as a computer. You can do everything, a movie theater, everything off of your phone. So that's just that evolution of that technology. Even the movies, we used to have to go to the movies. Right. Now you can stream stuff at home. So technology is constantly, pushing the envelope forward, and that's where you see the real true growth at. Another example of that is Zoom, ZM. They got earnings tomorrow. Zoom, their business took over. Their company grew 5-fold during the pandemic. Their stock price rose 5 times over. That's 500%, because everybody started doing things at home over those Zoom meetings. So that's technology. That's the NASDAQ. Then you have the Dow Jones. The Dow Jones is going to be your oldest index. And it's not even really an index, it's an average. So there was this guy, a Wall Street Journal reporter named Charles Dow, and some other dude named something Jones. They make the Dow Jones. And what they did was take 30 companies. At the time they created it in the 1800s, they took these 30 companies and they made the average, and that's what they tracked. Now that has been modified over the years, and now the companies that are in there now are not the same companies that was in there when it started, but it's an average of these, key players, in America, that we look at that average and say, oh, okay, the economy is doing good or the economy is doing bad. Now, aside from those, the Dow Jones Industrial Average, the NASDAQ, the S&P 500, we have what's called the Russell 2000. So the Russell 2000 is the 2,000 mid-cap companies. These are a little bit less than the S&P 500, those mega cap companies. This is mid-cap. These are people that make like 100 million or something like that a year. Those smaller companies. We know that small business really is the market leader. A lot of these small companies that come up, they eventually get gobbled up by bigger companies. If they see that value there and they get that traction, a larger company will just come and acquire it and buy that whole thing. However, it starts with just the small businesses that grow. And we can also track that. Now that one, you're really not going to see mentioned on the news or anything like that, but any place that you go to track financial information, you have MarketWatch.com, you have Yahoo Finance, CNBC, any one of these websites, they will have it listed there.
Mm-hmm.
Is that clear? Is there any other?
Yeah, that's piece right there, God, because I wanted to make sure like the listeners understood as well as me understand like the different indexes and which companies fall in what section, because I knew tech was somewhere in there, I knew pharmaceuticals was somewhere in there, but I didn't know exactly what the S&Ps was or the different indexes actually were.
Okay, another good point to point out is that when you look at the S&P, the NASDAQ, and the Dow, a lot of the largest companies in those indexes are the same across all three.
Mm-hmm.
I guess it's just for different reasons. Like when you look at the Dow is including those because those are market leaders.
Mm-hmm.
Okay, the NASDAQ has them because they're tech companies or whatever the case may be, and then the S&P has it just because it's a mega cap company because of how much money they're making.
Right.
So after you get past the top 10 holdings, then it's gonna start to differentiate. But in most of them, and you'll see that in that video that I did, a lot of them are the same across the same three, which now tells us.
Mm-hmm.
See, this is the point of doing the knowledge, because this now tells us that if I'm new and I'm coming in the game and I want to try to make some money, right? I can go and take, KY's got a hat company. I want to invest in his hat company. I could try and do that, right?
Mm-hmm.
Or I could just look at these major companies that everybody uses and just get a piece of that. It was like, why try and reinvent the wheel?
Right.
You know what I'm saying? Everybody's trading or investing in Apple or NVIDIA. They had monster earnings the other day too. NVIDIA, Microsoft, Nike, you know what I mean? Johnson & Johnson. Everybody is investing in these companies. So all I can do is just study those, right? Whichever one I'm comfortable with or maybe I'm familiar with. Like all of these cats that's out here, there's some cats out here that's video game heads. They know which games is coming out. They play a lot of video games. You should be, let me mess with Microsoft. Microsoft make games. Sony make games. Okay. NVIDIA, they make the chips that you need to provide the graphics to play the game. This is something you're familiar with. Okay, so there is a way for everybody, whatever you have a passion for, whatever you're familiar with, whatever field that you work in and you have experience in, you're going to come across information that the average person won't. Why not use that information? Knowledge is power. Okay, why not use that information to make yourself some money?
Right.
Got a question.
Now,
Got a question.
Okay.
Got a question. On making the right moves, trying to understand the framework of this, as you demonstrated about volatile, steady. How are people to get a learning literacy about the volatile versus the steady as far as the number grade goes, so they can be like, okay, I understand what I'm looking at. I'm seeing the different numbers. And I know what each one needs. Is that when you go in deep delve into reading, what books would you describe? I have people try to start off with at a basic level of understanding.
That's an excellent question, God. A basic level of understanding, God, it really depends upon what the person's goal is. Okay? Because for me, I need to be familiar with all of the technical aspects of trading. So I'm going to be more intense with my study. There's others that can be a passive investor where you don't necessarily need to worry about what is the stock doing on a day-to-day basis or hourly basis or week-to-week basis. You just need to see the value in that company and make your investment. Some of the books, I mean, you can even start as simple as, stock trading or investing for dummies. Yeah, anybody ever seen that series, for the For Dummies series? You can even start there, because long as you get familiar with the how the market works, then you're able to participate. Now, if you want to be an investor, you can read. Oh man, listen, you can read The Way of the Turtle. You can read. There's a book called How to Get Started in Day Trading. There's The Intelligent Investor. There is, so many books. That's one of the things I could do. I could send y'all a list of books. You can even do this. Yeah.
Do you got like TV on or good people around you? Because we hear like
that's my hey. Yo. What's up? You could even be you could go on Google and do a search. Top 10 investing books. Top 10 trading books. Most of the sites that come up and put that information out there, they're going to have the same books listed on there. There's so many water. There's so many different books that's out there that you can get started with. Also, if maybe you don't want to make that investment and get a book right away, there's a website that I love. It's called Investopedia.com. You can go to Investopedia.com. You can put any word in there, any term in there, any idea. They're going to break it down for you. Some of the books that I've read, I have The Disciplined Investor. I have Trading in the Zone. The Disciplined Trader, Trading in the Zone, Way of the Turtle, Fibonacci Sequences, Trend Following, how to get started day trading stocks, The Intelligent Investor. I have Day Trading for Dummies. I have Investing for Dummies. I have a whole bunch of audio books too. I have Market Wizards. Hold on, I'm gonna pull them up for you right now. Liar's Poker. Beating the Street, that's by Peter Lynch. How to Day Trade for a Living. The Alchemy of Finance. Unknown Market Wizards. Principles by Ray Dalio. What I Learned Losing $1 Million. Flash Boys. Market Wizards. Avoiding Option Trading Traps. The Daily Trading Coach. The Predictive Power of Options. One Good Trade. Inside the Black Box. Get Rich with Options. The Alpha Masters. Irrational Exuberance. Reminiscence of a Stock Operator. The Great Crash of 1929. An American Hedge Fund. How to Make Money in Stocks. That's what I would recommend for anybody who wants to start by investing. Maybe you don't want to be a day trader and all of that kind of stuff. I would get How to Make Money in Stocks, A Winning System in Good Times or Bad by William O'Neill. He has a whole system. And this guy also has created a website, and they have a news service called Investors Business Daily. And they have a great way of ranking stocks and breaking stocks down. So I would start there. Random Walk Down Wall Street, The Money Game. Those are some of my favorites.
Now I have a question, Mike. You know how when we have seeds, a lot of times people invest in bonds for the seeds. Are those good to invest in? As far as that, and how do they accrue over the years?
Well, with bonds are, they give you a specific amount. So if you get like a 30-year bond, you may get a certain percentage over those 30 years, but it's guaranteed. It's kind of locked in. Whereas with stocks, you know, the S&P on average is going to give you a 7.5% return on a year. Now, what if it's a bad year? Like if you look at, you know, 2002 or 2020 or any of these years that there was a crash, you're going to have to sit that out in order to, you know, get your initial investment back and maybe even get a profit.
Okay.
You know, whereas a bond, you are putting up a certain amount of money for a certain amount of years, whether it's 10 years, 20 years, or 30 years, but you're going to be guaranteed that particular amount, unless that government defaults. That's going to be another story.
Okay.
You know, but we're in the United States, and I mean, the way it's been set up, like it's guaranteed. You know, okay. Does that answer your question?
Indeed. Also, too, I know that when individuals get a job, they get what they call a 401k, 401a, things of that nature, and that means that the job is investing in a company to build your retirement. Is there a way that you can control where your money goes or as your investment, or?
You know what, God? That is a brilliant question. And you also bring me back to one of the things that made me more cognizant of how that works. So typically, when you have a job that gives a 401k, they'll have what's called a match. So you might they'll give you somewhere a cap. You could put anywhere between 1%, or they'll match you anywhere between 1% and 10%.
Right.
It would tell anybody who has a job like that, max out. Do the most that you can put, because if you're not, you're leaving money on the table. Okay. So if I'm putting, let's say I'm putting 5% of my check, right? And then let's say that averages out to $50.
Right.
I'm leaving $50 on the table if I don't participate. Now, a lot of us will spend, you know, 5 years, 10 years, 20 years, 25 years at a job. That's $50 every week that you just let evaporate when you could be maximizing off of that. Then these particular companies will have someone, the big dog in that arena is usually Fidelity. And you'll have an account. You can go and modify your account and modify where you're putting it in. Now, they're not going to really have it where you can do stock by stock, but they'll have funds, particular funds. Sometimes they'll have target date funds. So, you know, someone that's young right now that might be retiring 25 years from now, 50 years from now, they'll have that target date fund, a 2070, you know what I'm saying? And you can invest there. And they break up your investment into, you know, something aggressive, something moderate, and something conservative. Because how that's supposed to work is, as you're younger, like my young God is 26. So for him, he can he can take a lot more risk because he has a lot more time to catch up if something bad happened. Right. Whereas you get to my age, Coach Vaughn, I'm not trying to take too much risk. I don't got too much work years left. So then you get more moderate. Now, when one of the jobs I had like in 2008 is when I became conscious of it. And when I would hear like the interest rate changed or something like that, I would go and modify my situation. So a lot of Fidelity, you can go inside there, and I'm pretty sure their competitors do it as well, where you can go in there and you can change where you want it. Like you might be able to say, let me be aggressive this year. Put the majority of your money in an aggressive fund. You're going to put some of it in bonds, and then you maybe put some of your money in international things, because as the United States or America is this superpower, you have other countries that's coming up. Mm-hmm. India is one that's really starting to come up now and really trying to be a competitor with America in certain industries. Okay, so anybody that's working that has that 401k, I implore you to go ahead, get involved with that because it's easy money. Mm-hmm. That's number one. Once they're taking it out of your check, you're not even going to miss it, really. Mm-hmm. You know what I'm saying? A lot of them will tax you or will take the money out pre-tax. So you'll wind up getting taxed at a lower rate because you're taking that money out first. Mm-hmm. Okay? Then the company will match it. And then you can go inside whoever is managing that retirement fund and look at the different funds where they can put your money. Now you can take all of those things, mm-hmm. those funds, and you can go into other websites and kind of compare how that fund has performed. You can search and see how that fund has performed and maybe pick the one that's best for your needs and your interests.
Okay. Now, even with that, it's like, you have a bank account and they have a checking account, savings account, and a money marketing account. How do the money marketing account deal with the investment and day trading and things like that? Or do it deal with that?
Well, okay, so a checking account is really just going to be for you to pay your bills and stuff like that.
Right.
However, there's so many different banks competing right now, mm-hmm. and especially with the advent of online banking. Mm-hmm. I mean, back in the days, we had to take a physical check somewhere in cash. You don't even really got to do that no more. Well, even though you got like JP Morgan, which has brick and mortar locations, you have a place like Ally that is just completely online. Mm-hmm. Okay, so the hustle with that is a lot of these banks to get your business will offer you incentives, like a $500 bonus if you open an account, deposit this amount in, and keep it for this amount of time. So that's another good way. If you don't maybe have money to invest, you might be able to get something like that and get that money and start to use that money to start investing or something like that. Your savings account, this is supposed to be money that you just have maybe for your emergencies. As we talk about financial literacy, and this is something that, ravishes our community because a lot of times people are like that phrase where people say one paycheck from poverty or one check away from being homeless and stuff like that. A lot of times people come across different situations and they have no money saved and they're not able to recover from that. So a lot of people with the pandemic, they lost their job or their job shut down. So they had no income coming in. They can't pay their bills. Now we're going to start to see the effect of that because all of the aid that the government was giving, that's gone now. And a lot of people still have all these bills to pay. So anybody should be having 3 to 6 months of living expenses on savings. Mm-hmm. That's what your savings account really should be for. Mm-hmm. Now, with the savings account, you want to try to get something that gives you an attractive return on your money. It's going to be hard for you to even get more than 1% in 1 year. Mm-hmm. You know what I'm saying? Because during the pandemic, they cut the interest rates so much to cause people to spend their money. This is another reason why the stock market went so high. Because if you got money, you can't just really leave it in the savings account. You're not gonna make no money. You're not gonna be able to keep up with inflation. Mm-hmm. So all these people put the money in the stock market. And that's what keeps pushing the stocks up because there's really no other place to put that money. Money markets usually will have a more attractive interest rate, maybe 3% or something like that. And a lot of times, whoever's managing that fund will take that money and invest it or whatever so they can pay you a more attractive interest rate. Mm-hmm. Now, what I can tell you as a trader and investor is that you can make a better return by investing in strong, solid companies that pay dividends. Mm-hmm. Okay? So why put your money in a bank and have to wait a whole year to get 1% when you can invest in a stock that might give you 8% in that year?
Okay.
Answer your question?
Indeed. Now, when it comes down to like, I noticed like because been watching the stock market, I understand that you have utility companies on the stock market, you have police station, law enforcement agencies, you have hospitals, you have correctional facilities on the stock market, which is open for trade. Are they easy to get into, far as day trading or investing?
Well, a lot of companies, like, I've never seen any police department on there, but a lot of their equipment. Like when we had all those brothers, like around the time Philando Castile got shot and all those brothers were getting shot, there was a company called Digley, DGLY is ticker symbol. They make the cameras because that was starting to be a big push for all police officers to have those cameras.
The webcams?
The cams on their thing to record everything that they would actually have on their person. And that stock, let me see how that stock is doing right now. I actually did trade it before. Let's see. And that's $1.43. Digital Ally is called, and it tell you Digital Ally produces digital video imaging storage products for use in law enforcement, security, and commercial applications. And what I'm using right now, I was just looking at my cell phone, that is my CNBC app. Okay. So anybody, if you got a smartphone, you can download the CNBC app. You can create your own watch list inside here. And this is a good way to get familiar with certain stocks. I would say anybody can pick like maybe 5 stocks that you can watch and become familiar with. So when you see different things happen, look and see how that stock is performing. On a day-to-day basis, you can look sometime around 9:30 when the market opened, sometime around lunchtime, like 12, and then at 3:30, between 3:30 and 4, and see how that stock closed. By just doing that on a regular basis, you'll get familiar with that particular company. Now, there's a lot of companies that manage hospitals and stuff like that. You can find there's all of the hospital equipment, of course, drugs.
Of course.
Now, a lot of these companies may be good to invest in. Not all of them are going to be good for day trading, because sometimes they don't have, in order to be able to trade, it has to have volatility. It has to move up and down so that you can buy on the low and sell on the high in the day. But some of them don't have a lot of volatility. It's a nice, steady company and it'll go like that. And it's not really conducive to go in there and try to extract profit out of it. But it may be a good company to invest in because of they may pay an attractive dividend. They may make a lot of money. One of the companies that I often look at, I never traded it, is it's a surgical company. They make surgical equipment. Yeah, it's called Intuitive Surgical. This is $348. Let's see, it is up. It's down on the 5-day. It lost 1.7% on the week. It's up 2.6% for the month. And it's up 43% for the year. So a year ago, you would have invested in that. You would have made 43% on your money in 1 year. Okay, and what they do, they develop, manufacture, and market the Da Vinci surgical system and Eon endoluminized systems. So, you could do that. What was the other category you said? You said hospitals, you said police.
We had utility companies. Like I saw like public works and things of that nature that's on there. And those I think are like private institutions or stuff like that.
Well, you also have AT&T, Verizon, some other companies for out west. That now AT&T, they pay a very attractive dividend. The only problem with them is, I guess, there's just like too much competition right now. You got AT&T, you got Verizon, and it's like 2 or 3 others. You know, now these may be good companies to hold on to or invest in just for the dividend, or just because these people are making, you know, revenue that's kind of guaranteed. Everybody got to pay their lights and stuff like that. You know, it may not be good to trade though.
Okay. Now, how good is it to invest in a company that is in the process of merging?
It really depends. It really depends. I myself have never been involved in that, really, a merger. And a lot of times it really depends on how the deal is. So if you are an investor in the smaller company that is getting acquired, oftentimes that's good, because let's say you might have bought the stock at $10 or whatever. The company that's acquiring is going to offer a certain amount. They're going to offer something above whatever the last closing price is. So they might offer $2, $3 above that price. So if you're a holder in that company, then you're going to come off good, because you bought shares of $10. These people are coming and buying it. They're going to pay buy you out for $3 more than what you paid. That's good. Sometimes the company that is doing the acquiring, it has mixed results. If somebody looks at it, it's all on how the market accepts it. So sometimes the market might view it and say, oh, okay, this is a new revenue stream for the company that they're going to get. You know what I'm saying? So they might be happy. Other times people will be like, why are y'all spending money on it? Y'all can't even do what y'all doing here, and the stock will sell off. So it all really depends on the specific case, if it's going to be beneficial or not.
So the best way to day trade is to find a volatile stock.
The volatile stocks that move a lot. In order to be successful at day trading, you're going to need stocks that have volatility. So they're going to move what is called the ATR, which is called the average true range. So some stocks will move, you know, in 50 cents, in cents increments on a daily basis, and some will move what they call a dollar. You know, something like Apple, Disney, Facebook, these things move $2, $3, $4 a day. Okay, so you can trade those. Some stocks, if it trade, even if it's $1 a day that it moves in, then you're going to try to get maybe anywhere between 30 to 70% of that dollar move on a daily basis. So if you're trading in shares of, like, look at that Digley that we were just looking at. That one, that stock is $1.43, right? And let's see what it moved Friday. Friday it went up 13 cents. Okay, so if you had 1,000 shares of that, that's $100.
Right.
You're only laying out 1,400. So let's see, the open price or the low of the day was 126, the high was 160. It closed at 143. Okay, so you can get in. Let's say you got in at 126. You could have sold at 136. You'd have made $100 on 1,000 shares. Okay, so it's not so much how much it moves, but it has to move. If it's not moving, there's going to be nothing that you're going to be able to extract out of that daily activity.
Okay. I think Kay had a question.
Yeah.
Yes, sir.
Okay. I heard you speak about when you talked about day trading. Now, is day trading similar to what the Robinhood platform has opened up? Because I got a small investment. I use my older brother introduced me to Robinhood. I don't really understand it too much yet as I'm going along. I'm doing the knowledge, but I invested in AstraZeneca, and I haven't checked it in a minute. I have to check that stock to see how it's going. But is day trading like a small, what used to be known as like penny stock or fast stock trading, or is that just like a moderate choice when you say day trading? What do you really mean when you say you're into the day trading?
Okay, we're gonna use your company, AstraZeneca. Okay, so AstraZeneca, I know that's a drug company, and it went down 5 cents on the day. So day trading, what you're doing in day trading, like you take any stock, there's going to be some kind of movement on the day, okay? Regardless, that's just people buying and selling. We were talking about 401ks earlier. A lot of time they got to move money around, and they got to move. Sometimes they reposition. They might have been at the point where they feel that this stock is not going to go any higher anymore, and they may sell it. Okay, you have all of these different reasons why stocks fluctuate in price. So as a day trader, I'm trying to get money out of that fluctuation. Okay, no matter what stock it is that I'm trading. The thing about Robinhood, what I like about Robinhood is that Robinhood allows you to buy fractional shares. So you look at some of these companies, like for instance, Amazon. Amazon is like $3,000 a share. So a lot of people don't have $3,000 to buy a share of that. But on Robinhood, you can put $5 in Amazon or Apple or Google or any of these great big companies. You can at least get started by having a piece of that company. And that's part of the revolution that they kind of came out with by allowing you to do those fractional shares. So that's what I like about them. That's what's good about them. Okay. Now your question pertaining to like penny stocks, like, cause you really want to know what day trading was, or like, cause day trading, like, let's say, for instance, you say you have AstraZeneca, right? And you said you got to check it. Right. That's more like an investor's mentality. I know AstraZeneca is a good company. I put some money in it. It's here. I'm not even concerned with it, right? Whereas day trading, I'm not necessarily caught up in whether it's a good company or not. I just see that it's moving, and I'm trying to get some money out of that movement. But at the end of the day, I'm not holding it. I don't care about it. I'm just in and out. That's it. It's a flip. Whereas investing is parking your money somewhere and letting it sit there and letting it appreciate because the company's shares are going up in value, company's making more revenue, all of that stuff. They're paying dividends. You're just holding it. That make sense?
Gotcha.
Now, when you deal with, you mentioned also penny stocks. So penny stock is usually any stock that's under $5. So we was talking about the police cameras, that would be considered a penny stock. What's good about them is that they're affordable. The bad thing about it is a lot of times these people are not making no money. A lot of times, like, it's under $5 for a reason. It's not worth anything. You understand? Now you had, maybe it was either last year or the year, no, it was last year or the year before that, you had Kodak. Remember the Kodak cameras we used to do? Take the picture, used to come out automatically? That Kodak camera company, they had some kind of deal where they was going to develop equipment to assist with the coronavirus. I forgot exactly what it was they was going to do. They were either going to make masks or make something dealing with that. And the stock price shot up from like $1 or something to an astronomical amount, $50, $60 in days, just based off of that deal that they was doing with Trump. Okay? But that was a penny stock at the time. So the thing with penny stocks is kind of think about going to the casino and the penny slots. You know what I'm saying? You can trade those and make money off it, but you got to understand it's a complete gamble because a lot of times those companies are not worth anything. It's just hype. The only time that is a little bit different is with drug companies. Because with drug companies, a lot of times they'll be going through different phases, phase 1, phase 2, things like that. They'll be developing cancer drug or whatever, and it could be $1 today, and they get that FDA approval the next day, that thing could be $50. Okay? So in order to get in on the penny stock game, you have to really be like a day trader, because you're gonna have to study that stuff. If you want to get it, if you want to invest, then you're going to invest in companies that are nice, solid companies like a AstraZeneca, GlaxoSmithKline, or Johnson & Johnson, Merck, all of those big drug companies, because they have products that they're making money off.
Absolute. I hate to cut this because the hour then went past quicker than I expected, and this is so much information. We're gonna have to bring you back on to do a part 2 with this, because I have a lot more questions and stuff like that, and I'm pretty sure that our audience, once they see and hear what we was talking about, they will have a whole lot of questions as well. But I want to let you know that right now I'm about to get into this research with Robinhood and think about different aspects of investing in day trading, and I'm greatly appreciative of you coming on to the show. And man, like I said, God, you just expanded my mental when it came down to this, because it was a lot of information I didn't know that I'm appreciative of learning from you today. So that goes back to the each one teach one situation. So, with Real to Real 360, I'm appreciative of you coming on, God, and I hope that you enjoy coming on and being able to build on it, and we'll come back, soon, so we could do a part 2 to this.
Yes, sir. Like anytime, God, anytime. The Father said, that's one of the things that the Father put out for us, to get a trade. Everybody get a trade. You know what I mean? So I thought it was going to be MC of the year, So that's what I do, God. So anytime, just list out your questions and all that. We come back and we can do this weekly if we needed to, until we get it out there to everybody.
I appreciate that, Lord. I definitely appreciate that.
Yeah, absolutely.
Yeah. K, it's on you, my brother.
Yeah, absolutely. Once again, ladies and gentlemen, you have been blessed, and I hope that what you found in the short amount of time was very intuitive to you for information. Remember, keep hitting it, like us, subscribe, pass the information on, and everything that you give, we give back, it will bring it forth to you. So once again, absolute, I give you a true salute for coming on, and you have a home right here with the Real 360 show. God, you know what I mean? And definitely, yes, we will have a part 2. I'm gonna guarantee that, because you dropped some good jewels about this, and it's very important for everybody to know and hear, especially in our Black community. You know what I mean? So on that, we just gonna end this here. Don't go away, because we got the little after session real quick for a quick biz, and then we'll add on from there. All right. Appreciate you coming through. Ladies and gentlemen, on behalf of Josh and myself, we'd like to thank you again for attending the Real 360 show, and make sure you keep coming back, and we'll have more and more in store for you. And on that end, I'm DJ K Wise. Peace. We out.